Hello, everybody, and welcome to today's show. And a special show it is because I got two really smart guys in the house. A lot of you know both of them from seeing them here before. We have Nick Mancini, one of our directors of research and chief community officer at Trade the Chain. And we have the lovable, always lovable, Jon Najarian from CNBC and Market Rebellion. So thank you, Jon, for joining us today.
Great to be on with you and Nick. Thank you, Alex.
No worries. I wanted to do this episode because we have this Fed meeting coming up. Markets have been in the dumps. A lot of people, whether they watch us or they're part of our programs and stuff, they get nervous. And so, what I don't think is communicated enough is the insights into professionals like both you and Nick. And what you're looking at as we go in, because we could have easily just done a wrap up after the Fed meeting and said, well, this is what happened, and, this is the way it's going to be. But the nervous anxiety going into a Fed meeting is what people really want to care about. That's where the meat on the bones is, particularly with their own portfolios and their own decision making. So before I begin getting their opinions, note that this is not financial advice from Market Rebellion or from Trade the Chain. This is strictly our own opinions and us just doing friendly banter. Consider it entertainment at most. That being said, let's start off. With Jon, because Nick and I spoke earlier, and I think he might glean some further actions to what he's going to say if Jon goes first. But Jon, going into this meeting, you're a big options trader. You're also heavily into crypto. Our audience is primarily crypto. What are you thinking for both? And they're both kind of correlated, so it's an equal footing on whatever the opinion is.
Well, and thanks, Alex. I think overall that the markets have been nervous because the Fed, I don't know when the light bulb came on, but the Fed finally figured out that inflation is not transitory. They'd been saying that for a year and a half. And then we get, after inflation had already started, moving pretty dramatically, some would say hockey sticking, all of a sudden the Fed decides, well, yeah, now the rest of this that's happening right now, we'll hit it with everything we've got. And the problem in my mind with that, Alex, is that they let the horse out of the barn. Inflation is out there like crazy. And then you throw the war in Ukraine over it. And, it's not going down. We're not, you're not going to stop people from eating, certainly not the Fed. The war and, having no food on the shelves could stop people from eating. Not that I'm predicting that. But overall, you're not going to stop people from eating in the United States. You're not going to stop people from putting gasoline in their cars when, in fact, it's the last part of this is due to what's going on in Ukraine. The Fed has nothing to do with Ukraine unless they have some, hypersonic missile that we don't know about at the Fed. The Fed is just, going to end up hurting America, hurting Americans. And I say America because America's got to fund its debt. It does so at really low interest rates. And the more you jack up interest rates, the more painful that is for America, for the taxpayers. And it hurts Americans that need mortgages, that have credit cards and so forth that they're paying off. And it will not stop the inflation that's already out there, in my opinion. Eventually, it will cause a recession, I think, Alex, but hopefully the Fed wises up before they go too far.
Now, I think before we went with the Ukraine war starting, the Fed, there was predictions out there, and the Fed kind of confirmed it that 0.75 of a point over the course of the year was going to be probably what was going to happen. Then we had the Ukraine war. We've already gone up a quarter. Now we're looking at either 0.5 point or 0.75 of a point, possibly today. Do you think? What do you think the threshold is for what's built into the market right now, and what's going to be the tipping point to send it to bearish momentum soon after if they make a certain call? What's
I
that
think
percentage?
I think probably 75, 80% chance of a half point increase. I think very small, in other words, probably 15 to 20% chance of a 75 basis point move, and zero chance that they're only going to move 25 basis points. I think there is no chance of that. They would destroy their credibility if they did that. So I think the bonds have moved faster than the Fed, obviously, because as you say, the Fed's only moved 25 basis points, and yet we've jumped all the way up to 3% for the 10-year yield. So I think overall, we're going to top out in the very short term for probably a week to 10 days. We're going to top out, and then they'll start debating more vigorously about what they're going to do at the June meeting. And if they start moving towards 75 basis points in the June meeting, that ain't going to be good. If the debate still centers around 50 basis points, I think we will still move higher, but not jump as radically as we'd move if they expected 75 in June.
Yeah, not even halfway through the year, and we're already running through the runway that was predicted. So, Nick, your thoughts? What's going on, particularly in crypto, and what you're seeing?
Yeah, so I completely agree with Jon in terms of his percentages and outlook. I've been debating back and forth. So what I fully expected pre-Fed was not even the rise that we're seeing. So I was a bit incorrect there. And what makes me rationalize the market action that we're seeing right now is every single newsletter I read, every single headline I have read since late yesterday evening seems to imply that 0.5% is the number. Everybody seems to be on that page, and it seems like the market is picking that up and kind of started to run with that. Now, is that what we see? Will we see more volatility upon Jerome Powell's or the Fed's announcement and Jerome Powell's conference? Yes, we will definitely see volatility there. Have we kind of risen for the amount that we should on a 0.5% expectation? Yes. And if we get 0.5%, should we continue higher slightly? I also agree with that. But to maybe a slight counterpoint with Jon is depending on the guidance that we get, that is really going to spell immediately what happens afterwards. The Fed's going to make their announcement. We will get the news cycle. Then Jerome will talk, and he will let us know whether or not he thinks that a 0.5% increase in June is likely, whether a 0.25% is likely, or whether a 0.75% is likely. He will not tell you legitimately what he thinks, but he will start to cast a wide net or a skinny net in terms of what action the Fed will take over the next 30 to 60 days. So I am not going to make a decision, and I'm actually going to concur with one of my favorite traders on Twitter by the name of Cantor and Clark. He's trading the secondary action after the Fed speaks. The first trade is going to be extremely crazy. He wants to trade the second trade because that's likely what is going to give the market clarity in terms of the guidance that Jerome Powell will give us. And the guidance is what I will be listening for, because if it seems like 0.75% is coming in June, we're probably headed farther down. Now, if we're going to continue to stay the course and Jerome is giving us very clear guidance on what he expects, we're probably going to continue inching higher, much to what Jon said. So I will be very much looking out for the guidance rather than the immediate news for the actions that I will take following the Fed decision today.
All right. And I'm going to keep it with you real quick, Nick, because I want to hear, what are your positions? What's your strategy going into this? I know that you've been doing some levered positions. You've also, like me, have been a little biased on the short side, especially, with Bitcoin. What actions are you taking to both extend your opportunity going into this news, but at the same time, really hedging if it doesn't go your way?
Yeah, so let me go ahead and share my window really quick, and it probably helps to paint this picture rather than describe it. So what I'm seeing, what I've got right now is the 4-hour candles, and I'll zoom out for a second just to give everybody a bit better of a outlook. So what we have here is really the full movement since we topped out in November. We've been on, this is kind of our downtrend that we've been on right here. And we're in a, you call this an ascending channel, whatever you want to do. But generally, this is actually a bit of a bear flag coming off the downturn. So you've got a really wonky scenario in terms of the technicals here. Now, you're coming off of the trend and 3 taps, and we know Bitcoin loves to bounce on the 3rd tap. And we know that resistance is immediately going to come around 42K because we have the confluence of the 50 and 100 moving average, as well as the trend. So this is a natural target for any short-term bull, is that 41 to 42K range. Now, if the Fed says, we like where we're at, we might not even move up 0.5% in the next 30 to 60 day range, I would expect us to see all the way, maybe 44 to 46 would be extremely reasonable, as long as we continue to stay in this trend. And also, just for people, I'm not going to draw this perfectly, but typically the 50% range of the trend is also a resistance area. So you're seeing all of this confluence here. So if we get the guidance that we like and the obviously the rate decision that we like, it's very reasonable to expect 41 to 42K. If we immediately get a 0.75% hike with guidance that is in line with continuing that moving forward, we're likely continuing down. But given what the market is, given the news cycle, given the sentiments that we're seeing now, we're seeing a lot of things pick up, whereas they were down in the doldrums underneath 50 for quite some time. It does seem likely that a 41 to 42K play would be natural if we get exactly as we expect. And Alex, you and I have said this many times before. The market likes certainty. If the market is if we get certain guidance, then we will likely push higher. If there is lack thereof, the direction.
All right. And Jon, I really have to ask because I want to pry and I want to know, what are your positions going in? Not your exact positions. Are you leaving open positions going into the meeting, or what do you typically do as a trader to kind of seize the opportunity, yet at the same time hedge your risk?
Well, what I had been doing, Alex, was I was primarily playing it on the bond side. I wasn't playing it on the crypto side as much. I have been frustrated by crypto, not because I'm bad at it. At times I am bad at it, but because I can't stand 24/7 trading. That's just me. And so, Alex, and Nick, I had to do like they always say, when in doubt, zoom out. So I zoom out and I buy it at the extremes and I sell it at the extremes. So what Nick just said is exactly what I have been doing. I've been accumulating some Bitcoin in that 38,000, 37, whatever range, selling it at not at the first Fibonacci number, but as we push over 41, I've been selling it. And that's been working out better for me. In other words, I think I was kind of over trading Bitcoin in particular and a couple of the other coins just because damn 24/7 trading, man, it's a nightmare. But as far as bonds, and I know it's not a nightmare for people that are younger than me, but for me, especially with the Asian market being so much of a driver, and that being, of course, late at night or really early in the morning, it was too much for me. So anyway, I've backed out, like I say, when in doubt, zoom out. So I've traded broader ranges rather than tighter ones that I was in, and it's worked out better for me. As far as bonds, I have lifted all of my bond positions now in the short term. I don't have long-term bond positions except for, some bonds that I own, for companies that issued, convertible debt and things like that. But my bond trade, the TLT, I took off last week when we traded through 3. And the reason is that I do think maybe after Powell says what he says, just as Nick says, if he doesn't surprise us, I think then we flatline for a bit. And then we start, 10 days or so from now, we start focusing in on, okay, well, what about June? And the Fed will be back on the road, talking at breakfasts and rubber chicken and all that. They'll be talking about what they're going to do next. And that obviously influences crypto in a big way, because if crypto, if Powell is going to give us 50 now and 75 bips in June, crypto's going lower. I got news for you. And that's not breaking news. You all know it, because there's an alternative. This Tina, there is no alternative. There are alternatives now. So I think what we need to do is really get through this meeting, and God willing, he doesn't get uber bearish. And if he doesn't, I think we've topped out at 305 or whatever in the 10-year. And then we'll probably break down a little bit and test some of the metal of those traders, and then go right back up to work, but slowly, not fast, to 315 and 320. But if they hit us with, in all likelihood, we're going to have to throw a ludicrous 75 basis point move in June, even though we can't, that won't change fertilizer or crude oil or natural gas or anything else coming out of Russia and Ukraine. It won't change it by what the Fed does. Then I think we're going lower in bonds and lower in crypto.
Agreed. Last question of the day. Both of you guys, all three of us guys, were on Twitter. John, I think I don't want to understate it, but I think you have 250,000 followers or more, right? Yeah. So the news of Mr. Musk acquiring Twitter, is that good news for you or bad news for you? What do you think? Both of you, what do you think is going to happen with Twitterverse now?
Overall, I think it's great for Twitter, and it's good for free speech. It's good for America and the world. I think we need a platform where people can speak. And that doesn't mean, as I've told a number of people who have hit out at me, I don't think that means that you can libel somebody or you can slander somebody. No, you can't. In fact, you've made it worse for yourself if you do such a thing on Twitter, unless you're hiding behind some avatar and it's not really Alex Macioli, it's not really Nick, it's not really John, but our names are on our Twitter accounts. So there's no way I'm going to slander somebody. And could I have a disagreement with somebody about, the necessity of a mask or vaccines or anything else? That should be an adult conversation. It doesn't need to be blocked. But I will say that since Mr. Musk has made this move, my Twitter account has gained 25,000 followers. And I suspect that's the shadow banning that Twitter had been doing, guys. So I know some people immediately lost followers. I'm now over 300,000. And I think if Twitter hadn't shadow banned me for the last year and a half, just because I tweet controversial stuff, but I don't libel anybody and I don't slander anybody, and I don't knowingly lie, I don't think Twitter was right to do that. So I welcome Mr. Musk. How about you, Nick?
Yeah, so I agree with you for slightly different points. I think just Elon himself is a mogul, and if you bet against him on any one of his companies, you would lose. So It's tough to bet against him after the momentum that he's already built up. I do think that he's basically the world's chief meme officer. So is that good or bad for a platform that wants to continue to be taken seriously? That's up for debate, but he's clearly good at Twitter. So if he can lead by example and not be someone who is universally hated, then I think it's a good thing. Does Twitter also need to expand business offerings and get a little bit more innovative in how they engage their community? 100%. They can't just keep airdropping random things at us and thinking that we're just going to adopt them in mass. Twitter just needs a better business strategy. I don't know if he's the perfect person, but for right now, he is the best option Twitter possibly has, considering his stature, his success, as well as the fact that he seems to be engaged in wanting to take it to a new place, a wider place, one that's more engaging and fruitful for the community with it. So will I be using Twitter for, crypto communities and, delivering information in a very acute sense? I don't know. Discord and other, aspects seem to be good for that. But could Twitter go into that realm? Could they leech off the Twitter or the crypto and the NFT crowd? Could they do something new and unique that forwards the industry that seems to have nestled itself within their boundaries? That could be another angle for them as well. So they have a lot of options. And I agree with John that, it would be tough to bet against Elon at this stage, especially with the direction that he has signaled that he wants to take it in, monetizing growth activity. So.
All right. Well, there you have it, folks. And like DJ Crypto in the comments said, I wouldn't mind being an anonymous online troll for a couple of days, see how that feels. We've all seen them cruising around. But don't forget, catch Nick and myself over at tradethechain.com. And please catch John over on the Halftime Report on CNBC, as well as marketrebellion.com. With his brother Pete. So, gentlemen, thank you for joining me, particularly on this important day for the retail guys and the new guys. So appreciate it. Everybody else, hang on to your handlebars. We'll do a recap of what happens in the meeting tonight. Thank you.